So traders, the market is slowly starting to get underway when it comes to this market, when I believe it's going to be a crash period for the market. So let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so see that training course there, guys? Make sure you grab access to that. I'm giving you a free membership access to that trading course from there. Very first thing in the description, you get free membership access to that. So let's actually go start off with the S&P 500. Let's actually see what's been going on with the S&P 500. So the thing that I'm noticing here with the S&P 500 is that we're now developing this lower high here, and I talked about this in yesterday's video, that this is a repetitive pattern that's happening again and again and again, right? And just for you guys that haven't seen it, what happens is that we have a high, we have a false breakout, we have a drop. We have a high, we have a false breakout, we have a drop. We have a high, we have a false breakout, then we have a drop. And then what ends up happening also is, look what's happening now, right? Not only did we get a false breakout and drop, but we actually broke below 2 support lines. Now we're rallying back up to start to create a lower high from here. So to me, this is what the market does at tops, right? Or before this, right now the market's slowly rolling over, and then what ends up happening is that then we start to really pick up some steam on the downside. So that's the very first pattern that I'm noticing there when it comes to the S&P 500. The other pattern that I'm noticing is this big channel. Now, one thing I've noticed when it comes to what's called false breakouts, okay, is that, just say for example, you had even if it's like a sideways, if you have a sideways channel, okay, and you have the market do this, right? It's bouncing into channels, down, down, down like that, come down, and it does something, and it breaks down like that, but then it comes straight back up into the channel, right? And then comes back down like that. What is this here? This is now what? It's a false, this level right here is now a false breakout. Why? Because if it was a true breakout, we would then what? We would then continue going down from there. Makes sense? So we would continue that, and then but because we didn't, we got back above it. Now it's saying that this is a false breakout. When that happens, there's a high probability we're going to get to the other side of the channel. Makes sense? So that's what I'm seeing through there. And it happens with also what? It also happens with diagonal, like downward sort of upward sort, any channel really out there. If we get some sort of false breakout, and as you can see, that if I just draw that again, we had this resistance level here, we had this resistance level all through here, right? And then we also have this whole level all through here as well too. So you can see that that's what's going on right now when it comes to these markets. And when it comes to this. Now, guys, if you are struggling with your trading and you're having a hard time when it comes to your actual trading, or maybe you're losing a lot of money and you're just not sure, in that free trading course, the very first video you get, okay, the very first video you get is the top 13 mistakes that I've made over the last 19 years, and also probably what you're making, and also how to overcome them. So that's what you're going to learn, and you're going to learn, especially in that very first level there from that perspective there. Let's actually continue now on to the Dow Jones, and the Dow Jones level for me has indeed been this level all through here, right? So we had this complete nice sort of triangle pattern. We broke out to the triangle pattern. Now we're at this level through here, and we are rallied down, and we did bounce off this level through. You can see this whole level. If I bring up, notice where I got that level from is, see how we had a lot of support and resistance through there. We had a lot of bouncing. So all these sort of level through here is quite a strong bounce. And look what's happening. This lower high, at the market's talking to us right now, guys. The market is looking very, very, very weak. So there's a high probability that we're going to break this level, and we're going to start to see a pretty strong free fall in the markets when it comes to the Dow Jones from there as well too. Moving over now through to the Nasdaq, and the Nasdaq is doing something really similar as well. And what is the Nasdaq? The Nasdaq has got 2 levels of support. So we've got this first one down through here. You can see how we've actually rejected. It looks like a bit of a bull flag. And we have this sort of resistance is now becoming support. Now, why is that important? The reason why it's important is this. What happens is if we get something like this breaking down like that, what does that mean? That this resistance, which was support, is now going to become what? Resistance again, right? So therefore, we're probably likely to see the Nasdaq continuing down from there down to new lows as well too. So right, so that's the big thing that we're looking out for there, to start to see what's happening on the good old Nasdaq for there. So let's go have a look at the actual gold and silver right now. Gold actually had a little bit of a down day. I don't believe this. Oh, sorry, this is silver, should I say? I don't believe silver is going to continue down strong from here, because we had a little pullback and we had a big drop to the downside. So I honestly believe that silver is probably likely to go a bit sideways from here. Let's have a look at this here. Yeah, I don't believe silver is going to continue down much stronger. We may even develop a bit of sideways movement. I don't believe it's going to be very strong to the upside, but we may get some sort of sideways movement out of silver from there. Looking at that, also looking at the gold market as well, is that the gold market is, we can see how that when we get this sort of sideways movement from here, is that we're getting this here. So I believe we're probably likely to get a bit more sideways movement, and then probably gold is going to continue down from that level through there as well too. Move over now through to the, let's go have a look at the mining sector. So the GDXJ, once again, is starting to develop a sort of a lower high here. But we are at a point right now, once again, is I believe we're probably likely to do something like this while we start to see this moving average start to come down like that, right? Use the right color, right? Wrong color, all wrong colors. So we can see that's what's going on there. So if we start to develop this sideways range from here, then we're probably likely to see some more downside to come from there. Moving over now through to the GDXJ. This is sort of my baby in a sense, and we can see that that's what's going on from there as well. So we have a low, we have a lower low, and now we're developing this sideways range. We're probably going to continue that until we start to get this moving average coming down, and then we're probably going to start to see some movement on the downside. So all these markets, guys, all these markets that we're looking at right now are looking very, very, very weak. Now, I want to finish off with something here. I say the market is very weak, but remember, it's a market of stocks, not a stock market. So that means if I'm looking at the S&P 500 and the S&P 500 is doing one thing, right? It's looking bearish and we should get the movement on the downside and right? When that happens, if we have that view, if I get a really good bullish setup on a stock within the S&P 500, I'm going to take it, because I know within my setup, which I teach you for free in that trading course below, when I actually get my trading setup, I know that my setup has a massive win-loss ratio, high win-loss ratio, that I'm going to do really well. And when I do have a loss, I have small losses. So they're the big things to actually keep an eye out for when it comes to trading the markets, is not being so swayed by the indices, right? Because we look at the S&P 500, look at the Dow and so on and so forth, and we say, okay, this is what the market's doing. But really, it's a market of stocks, not a stock market. So the S&P 500 is really just the S&P 500. It's the S&P 500 is not Berkshire Hathaway or Facebook or Netflix or JP Morgan, right? They're all doing their different things within the marketplace. And as long as we can start to step back and say, okay, I do my analysis on the indexes to give us an overall view of what's happening with the indices. But remember, when we're trading the markets, we want to be trading based off really good, strong foundations of a good trading system. And once you can start to trade this trading system and patterns that you know that work most of the time, you can really, really, really do really well out of the markets. The hardest thing, though, out of all trading is that discipline to focus on one trading setup, and also the patience of waiting for those good setups to come around.